So I picked a few dividend stocks based on these principles. Company reliability. The risks should be minimal. Dividend reliability. Optimistic future. The business should not stagnate. Market and sector diversification. You need to earn $6,000 a year to have $500 a month. Total dividend yield should be 6% for $100,000 portfolio. Since the companies are reliable, there is no need to buy too many stocks, so I picked only 6. The first company is Silicon Motion, an American-Taiwanese company involved in developing NAND flash controller integrated circuits for solid-state storage devices. They are found in commercial, enterprise and industrial applications ranging from SSDs, memory cards, eMMCs, and USB flash drives. The company has excellent financial condition, the stock is cheap, and earnings are forecast to grow 21% per year. The company has been paying dividends consistently since 2013, estimated forward dividend yield 2.7%. There are 200 stocks in the portfolio, which costs $15,258. This will give $418 in dividends per year. The next company is Volkswagen, a German motor vehicle manufacturer and the largest car maker by worldwide sales. In 2017, Volkswagen announced plans to place a considerable focus on electric vehicles, with a goal to, by 2025, launch at least 30 EV models. In November 2020, Volkswagen announced that, trying to remain the world's largest car maker in the green era, it has increased its investment in electric and self-driving cars to $86 billion over the next 5 years. The stocks are very cheap right now, very undervalued, and the company is an established dividend payer. Earnings are forecast to grow 7.5% per year, estimated forward dividend yield 3.26%. There are 75 stocks in the portfolio, which costs around $12,000 and gives around $400 dividend per year. The next company is British American Tobacco. The company is a British multinational company that manufactures and sells cigarettes, tobacco and other nicotine products. As for reducing cigarette consumption in the world, British American Tobacco is actively replacing them with the so-called next generation products, electronic cigarettes, vapes, etc. So the tobacco and related products industry is doing well despite the worldwide anti-smoking trend. Sales are growing. The share of products designed to replace tobacco is increasing, vapes, electronic cigarettes, plus the company has interests in the cannabis market. The company is trying to diversify its business as much as possible. Earnings are forecast to grow 6.87% per year, estimated for dividend yield 7%. There are 435 stocks in the portfolio. This will give $1,300 in dividends per year. The next company is AT&T, the largest provider of mobile telephone services in the US. The long story of the Warner Discovery deal ended recently, and I think it's not a bad deal because the company is now fully focused on 5G and could become one of the main beneficiaries in this niche. Estimated forward dividend yield 7.4%, which is still very good for such a reliable company. There are 906 stocks in the portfolio. This will give $1,300 in dividends per year. The next company is China Everbright Environment, a Hong Kong incorporated company that specialized in environmental resource management in mainland China. The company owned by China Everbright Group, which is a Chinese state-owned enterprise. The stock is very cheap. Since 2005, the company has consistently paid cash dividend twice every year and dividends gradually increased. Earnings are forecast to grow 5.9% per year, estimated forward dividend yield 8%. There are 25,000 stocks in the portfolio, and it will give $1,200 in dividends per year. The last company is China Mobile. China Mobile is the largest mobile operator in China and worldwide. The number of subscribers and revenue are significantly higher than its competitors. Thanks to China Mobile's huge customer base, it's easier to promote new products and save on marketing costs, which allows to maintain a fairly high profit margin. Return on equity 9.7%, which is higher than competitors. The company has an impressive amount of cash in the accounts, about $33 billion, as well as has a consistently positive free cash flow over the past 4 years. Company pays dividends, grows and develops new markets. Earnings are forecast to grow 7% per year, estimated for dividend yields 6.3%. There are 3,000 stocks in the portfolio, and this will give $1,300 in dividends per year. So total value of all of the stocks is $100,000. Total annual dividend $5,990. Total portfolio dividend yield 5.99%. This is a dividend portfolio based on high reliability. Of course, you can try to build a high risk portfolio with higher dividend yield. This portfolio has balanced ratio of risks and reliability. That's all. Thank you for listening.